Did the last 3 months in the stock market have you feeling like this guy, or even this guy? Look, Q1 2022 was one of the worst wipeouts for growth stocks that we have seen in years. At the same time, we're seeing some incredible prices right now. So if you are looking for a strategy to take advantage of the opportunity we're seeing in the stock market right now, you're in the right place, because you're about to hear from two of the best trading experts in the world who actually thrived during the last 3 months. So they're going to give you the big picture outlook for the market over the month ahead. They're going to tell you the number one sector you need to keep your eye on, and they're even going to drill down into that sector and show you 3 stocks that should lead that sector and potentially even the market higher over the next few months. So strap in, let's go.
Hello and welcome back, True Options Masters, for our next monthly market outlook for the month of April. The worst Q1 on the books since 2020. How do we deal with this? Indeed. Well, there's a lot of opportunities still, as we know, as options traders, as true options masters, no matter where the market goes. So I'm here with our very own Chad Shoup, who's going to show us the top 3 stocks on his relative rotation graph this week, as well as Mike Carr giving his S&P 500 outlook to show us where he thinks stocks are going. If you like this content, be sure to give it a comment, give it a like, give it a subscribe, and make sure you're reading True Options Masters every single day of the week. I almost said weekday, but now we're every day of the week. Guys, how we doing this morning? How we feeling about the market?
Now, I'm feeling pretty good. I know Mike's about to break down his charts, and then that's when we get the reality of kind of how things are settling up. But like you mentioned, it's the worst quarter, so far. But to me, we had a big drop. Then, we had a nice bounce out of that, and we're seeing some volatility now after that move higher. So I'm still feeling pretty good about the market.
Cool. And Mike, what's your gut take?
Yeah, I think we are testing the breakout. So we shot straight up out of that March bottom, and now we're retracing a little bit. I don't think it's going to go too far, and then we go back up.
All right. I like the sound of that. So I'll just get right into it. We'll kick it over to you first, Chad, with your relative rotation graph. What is the sector to watch this month for us to get the best gains?
All right, let's share my screen here.
Yes.
I always like to do a brief recap of what we had last month. Last month we were bullish on the tech stocks and we were bearish on materials. So our tech stocks did okay. A couple of those stocks, they ended up being up. They went down a little bit during the month and then they finished strong. So we saw some movement higher in that, but the materials, and we're going to watch this on the RRG real quick, rotate around. But they ended up taking off going to the upside. So we see that they were headed lower in this leading quadrant, headed towards weakening. And this is, once I pull up all the indexes, I'll talk more about the profit radar again to give a recap on it. But basically we expect this rotation to head back down into the lagging to make the full rotation. But as we went through the month, it hit the weakening and then turned sharply higher back into the leading quadrant. And then the technology, we saw that turned sharply lower right after we were bullish on the stocks. So we got kind of caught up there at the beginning, and then the materials went the wrong way for us. And then tech pulled strong after that. So tech finished strong for us. The material stocks, even though we were bearish on them, they kept heading higher. So they followed through with the strength that they were seeing before. So let me pull up all the sectors for the S&P 500 and just take a look at where things are today. In this market, we see a lot of movement. The energy utilities were these light green lines on the outside, just a lot of movement in those sectors in general. But when we look at this, we want to find ones that are kind of at a turning point coming out of this lagging quadrant, because they make this natural rotation. At the center of this is the S&P 500, and then going around it are all the sectors that make up the S&P 500. So we see that there's this natural rotation of just rotating through these 4 quadrants, from leading, then they weaken, and then they start to lag behind the market, then they improve eventually in momentum, and then they lead the market again. And then it's just a continuing cycle that we can tend to pick up on just by following this profit radar, as I like to call it. So this time, for this month, the sector that we're going to be watching is the industrial sector. Now, it hasn't quite made that turn higher yet. So last time we got into things right after they were turning higher, and it was like a false turn and then they pulled lower. So I think that it's good that we're a little early in this one, because it's trending sideways into the lagging quadrant, and then we're looking for it to start to make this turn to the upside, and then go into the improving and leading and see the big swing that we want to profit from. So as we break down into this, we want to dive into the industrial sector and exploit all these stocks up, so that way we can see which ones are performing, where they're at relative to the industrials. In this case, we put the industrial sector for the ETF in the middle of this chart, and then I plot all the stocks that are in the industrial sector around it. So we take the same approach. We know that we're expecting the industrial sector to improve and eventually lead against the overall market. So now we're trying to find stocks within the industrial sector that are going to outperform the underlying industrial sector ETF as well. So XLI is the ticker for the ETF. So to do that, we're looking for the same thing, stocks that are coming out of this lagging quadrant and set to turn and head higher. And you can see that we have a couple lagging down here, still heading lower, some that are starting to make this turn higher a little bit, and one that's out on the fringes that's already turned up. And another quick recap thing that I always like to just touch on, we try to focus on stocks outside of this like cluster here in the middle. And that's because the further away from the center that we go, the more volatility you're seeing in the stocks. And volatility for a trader just means movement. So like these stocks up here that are up to the upside, they're just seeing more movement even to the upside. And the stocks down here are seeing more movement to the downside. So just volatility showing us more movement. So we can expect bigger price moves on stocks that are further away from the center. So our three stocks that we wanted to add to our radar today to keep an eye on for the month. First one, Stanley Black & Decker. It's already entered into the improving quadrant, so we're betting on the strength just to continue, but just wanted to show you what we are getting into. These are stocks that have pulled back sharply over the last couple of months. Stanley Black & Decker, this one actually had a nice little head and shoulders pattern that it broke below the neckline. So it had the left shoulder, the head, the right shoulder, pretty easy to see, broke below the neckline on that. But I think now the move's played out. It's kind of went through the full expected price move after breaking below the neckline. And now we're seeing it kind of chop around here at the bottom, and it's shaded red, so it's in the lagging quadrant. And we're expecting that to move higher out of this as the industrials start to improve. And then the other stock, another one is going to be Fortune Brands Home Security. We can see that one's here in the lagging and starting to make this turn higher. So it's kind of picking up. There's a couple other ones that are doing something similar, like Masco and Allegion. So they're kind of in a similar pattern. This one's further away, so we expect to see a bigger move. And again, big sharp price drop, broke kind of below a key support that would have been running through there. And we're just looking for a bounce. This is not, if you catch my quick takes videos, bank it or tank it. I'm not saying that these are bank it stocks that they're expected to hire for months, but over the next couple of weeks in the short term, that's what we use this daily RRG for, is to find these stocks that are set to make a bounce. Awesome. And then these Freightliners, these are the last ones that I wanted to look at. JB Hunt Transportation Services. So they're they're transportation companies. And on Friday, they took a big nosedive because the hirings came out as basically under expectations. They didn't hire they lost about 4,900 jobs when they were expected to grow their jobs. So it's the first cut since April 2020. And the market panicked a little bit. I mean, the stock dropped 10%, continued to fall. And we saw that even though it's in this lagging quadrant, it's still headed lower. So it could drop further. But in this month, I'm expecting to see JB Hunt bottom here over the next couple of days and be a great opportunity to catch a bounce heading higher out of this as kind of things settle off. They just had a nice run up. You can see that these stocks have been on fire, big run higher, and then a sharp pullback. And now we're just looking for things to settle out, catch a little bounce out of this, maybe run back up to 190, 195 bucks a share on JB Hunt. So those are the three stocks that I'm keeping an eye on this month out of the industrial sector.
This is great, Chad. And I want to mention why I think following the profit radar is so useful. It kind of shows you which knives to catch in a way. So you want to stay away from something like JB Hunt for the time being, because there's no evidence that this is going to turn higher. Or if it does, it's going to catch everyone by surprise. Whereas SWK, that if you want to actually pull up the SWK chart, there's another thing I wanted to point out for that. This, we're seeing evidence of it turning into the improving sector. So that kind of suggests a bottom. And what's great about this is, Mike Carr, you actually demonstrated a head and shoulders pattern in our True Options Masters issue yesterday, which you can follow for this exact stock. You can see that from the top of the pattern to the neckline, what's that range? Oh, about $30, something like that.
Yeah.
And we can
40.
see that. I mean, it's almost more than taking out that range from 177 down to 140. So we have a very textbook head and shoulders breakdown and bottom here. Of course, anything can happen, but I like that we can marry this technical analysis that Mike is teaching us with your profit radar to kind of give us the best trade opportunities right now. So Stanley Black & Decker looks very, very promising. I also wanted to point out some other things on the sector ROG. If you go back to that tab.
Yeah. Let me pull it up.
So XLF, really interesting action. It seems like it was improving for, I guess that was 7 or 8 days ago. And then it just nosedived right back into the lagging section again. So that, I mean, how would you read that? Would you read that almost as like a kind of an oversold move and it'd be likely to jump back up into the blue again?
Yeah. I mean, once they hit this lagging quadrant, that's when we start to look for them to turn higher. So yeah, I mean, it's down here in the lagging, hasn't started to make the turn yet. Still trending, kind of heading the southwest direction.
Mm-hmm.
So we'd like to see it start to turn more kind of like industrials. We know we're early on the industrials. They haven't really made that turn yet. But on these daily charts, it is very short term. So it's, just a couple of weeks is all that we have to kind of see these moves play out. Because up here, the consumer staples, they've already been running into this improving quadrant for 4 or 5 days now. So they're kind of already made that turn. We'd like to catch them down here a little bit more to where we're catching closer to that bottom in the short term before they really start to see the improvement. And then once you see the run into the improving and leading is what we want to catch, that nice run higher. And then that's when you see the big gains. So we don't catch it all the time, as we saw in the tech stocks last month. But once you catch a clean run higher, then that's when the big gains come.
I was just going to ask about XLP, if maybe that's more of like a conservative way of using the RRG, if something's already moved into improving, but it seems like you miss a lot of the move that way too. So just a fascinating
move. So, and then the move could be over sooner too. Because if it ends up pulling like a financials where it only runs for a couple more days and then turns lower, then you only had a couple of days there where it was actually improving before it went through another rotation.
Very cool. All right. So just to recap, this month, we like the industrials out of all the sectors in the S&P 500. And out of that sector, it looks like MAS, FBHS, potentially SWK, and are the most promising. And you were also looking at JBHT just for how extreme that move was.
Yeah.
To the downside.
Yeah. After that big drop, it's worth a shot.
All right. Awesome. Thank you, Chad. Let's kick it over to Mike for the broad market analysis. Where are we at with the S&P, Mike?
Okay, I want to start with first thanking Chad for that great example of a head and shoulders. I'm always looking for perfect chart patterns, and that SWK is about as clean as they come.
Yeah.
So I'm going to use that one more often. I also then wanted to back up and look at what Chad was talking about there. And while he was talking, I pulled up a chart. This is the Cass Freight Index and its expenditures. This shows how much companies are spending to ship goods all around the country. And it broke to a new high here. So that is very consistent with what we're hearing, especially given this chart. This is the shipment index showing the amount of freight moved. So the amount of freight moved is far from a new high, yet companies are paying more than ever. So companies are paying more because there's not enough drivers. There's just a shortage of the ability to move the goods to where we want them. This explains why grocery store shelves are empty. All these charts do play together. The stocks do reflect the news. And that's the big story right now. Stocks are trading based on news. The XLF that you mentioned, Mike, that's an overreaction to the Fed is tightening. So if the Fed tightens, the banks are going to have to take that money that's sitting on excess reserve balances at the banks. So a bank has to hold some percentage of its assets in reserve. It used to be vault cash. Now it's electronic. It's excess reserves at the Federal Reserve are paying interest. If the Fed stops giving the banks 0.5% of free money, the banks are going to turn around and lend that out to companies that need it, and they'll make more than 0.5%. So we're seeing overreactions to the news, and then we're seeing overreactions to the upside. So XLF probably going to bounce here as the market factors in. We're recording this on Wednesday. The Fed releases minutes from its March meeting, 2 p.m. Eastern. Brainerd kind of telegraphed what's coming yesterday. The market plummeted as she spoke, and we should see a bounce here today, most likely starting in the last hour of trading as this news gets cycled through. Now to the S&P. I know it's a complex chart here, but here's where we rallied to. And now we're simply retracing. We're around that 200-day moving average. We broke above it. It is not uncommon to test it again. Come back down to it, bounce off of it, and then you rally higher. This is still within the scope of a normal retracement. This was a strong move for the market. And I can tighten it up a little bit here. We could go from here. And we're right there with today's action. We're bouncing off the 38.2% retracement.
And let me just ask, you're using the Fibonacci retracement levels here, right? So just
Correct.
a little bit of background. The Fibonacci retracement, you could probably explain a lot better, Mike, but it's essentially a way of gauging after a big move, you can gauge how much that move is going to come back in, essentially. So we had this big move to the upside, looks to be something like 30 points in the S&P, a little bit more. And what you're seeing is that we could retrace something like 38% of that move. I think that's generally around the levels of the first Fibonacci retracement. And of course, there are those other levels lower, but we have the support of the 200-day working with us as well. So you could probably explain that a little bit better than I did, Mike.
No, I think Fibonacci's are interesting to me because a lot of people assign a mystical quality to it. It's the ratio of the Great Pyramid. It's the ratio of the brachii and cat lungs, on and on and on with ridiculous examples. It's just really easy to add to a chart. I click on Fibs, I click here, I just added it. Every software has that capability. That's why they're important, because they're a one-click tool in every charting platform.
Yeah.
So large hedge funds are doing this as well. We know that nothing goes straight up. It retraces. Fibs are a way to measure where the retracement is. Buying pressure comes in. That was just a random one that I did. We see that that proved to be support. We got a rally.
Yeah.
After we broke below it, we had a quick sell-off. This is exactly as expected because funds trading billions of dollars are using this tool.
That's even that example you just threw on. It's so weirdly accurate, but it's not weird when you think about it, because there's two arguments, I think, to technical analysis. It's like the more people use some indicators, the better they will work, but also in some cases, the worse they will work. If all the biggest hedge funds are using Fibonacci retracement, you can kind of bank on these levels for things to bounce or retrace in either direction. So very useful tool for people to start using, and you can find it on most any charting platform.
Yeah, and I think what's like, if a fund is looking to add to a position, they will be heavy buyers at a Fib retracement level. And that's true for several big funds that I know of, that their traders are looking to enter. They're using intraday Fibs, they're using longer term, depending on what their trader is trying to pull off. So it's just an interesting tool, very important to keep in mind. So here we are, we've got the retest. Now, we came down and hit our price target, and the price target was back here. It was determined by the distance above the moving average.
Right.
So I moved a line that I shouldn't have moved.
Well, that's all right.
So it's around here.
Okay.
But from the extreme above the moving average to the symmetrical move below, here's our price target. And we hit it. We came a little bit to the downside. We played around that level for a few days, and then the market took off after it decisively broke away from that level. So this is a retracement. Now, the target is up here near 500 based on that same technique. So we should see this retracement winding down here in the next few days, the next leg up, another retracement, and then a move up to 500, probably by the end of the summer.
End of the summer.
So this is a great buying opportunity right now.
Very cool. All right. So we have, well, you have a pretty ambitious price target for the S&P 500 out to 2024. I am curious about that, but in the more short term, you're thinking we could see new highs in the stock market by the end of this summer?
Correct.
Wow. And just to refresh our memory, your S&P 500 price target by 2024, are you still sticking to that? I remember it was somewhere around 1,400?
It's 11.
Oh,
11,000.
11.
And that's based on money flows.
Yeah.
And there's just so much money that needs to be invested in the markets right now. And there's still cash flows that are adding up. And all of those cash flows are being diverted to stocks because as interest rates rise, bond prices are going to fall. So you're seeing less flow into bonds, more into stocks, pension funds, state government pension funds. Everybody's going to be pouring into stocks a little bit more than normal. You're also going to see a crackdown from the SEC here on private equity that's going to favor public markets. So that's going to lead to a couple trillion more dollars into the stock market. All these trillions start adding up. And when I did the math, it adds up to about 11,000 on the S&P 500. So that's where that comes from. It's just simple cash flows and realistic multiples because we're not going back to a world where the PE is 12.
Yeah.
So
it's so rational, but you hear like a 4-figure SPY and you almost can't believe it, just from everything we've been conditioned with for the past however many years. But when you put it that way, it almost seems inevitable. So let's wrap up for today. Thank you for that analysis, Mike. Really, really excellent technical tools and great outlook on the S&P. Just to recap everything we've covered today, Chad, you're bullish on industrials this month. Your 3 stocks were, you're going to have to remind me, Black & Decker, and then the other 2?
Yeah, Stanley Black & Decker, then the, what was that company? Fortune Brands Home and Security, ticker FBHS. Masco, you can take a look at Masco Corp, and then JB Hunt, JBHT on a flyer after that big drop. If we get the improvement that Mike's talking about down there, then this could be a good opportunity for them as investors kind of realize they overreacted a bit to that. So we'll see.
Awesome. Those are your stocks to watch from Chad. And Mike, you are bullish on the S&P to 500 new all-time highs by the end of summer. You're showing people Fibonacci retracement levels, very simple things everyone can do to get a sense of where the market's going. So I want to thank you gentlemen both so much for joining us on my first monthly market outlook. Hopefully we can make a habit of it. I had a great time. And if you had a great time, you watching this, like, subscribe, comment, all that stuff people to tell you to do on YouTube. But most importantly, read True Options Masters, because you're hearing from these 2 fellas, the smartest options traders probably in the world that I've ever met, certainly, every single day of the week. Their best ideas delivered to your inbox, 100% free. Stop missing out. And with that, we're going to wrap up today. Thank you guys both so much, and we'll see you next time.